what's going on? In this video, we're going to share some details that could have made you a ton of money on the last two videos that were posted about Zoom and Tesla, specifically how to short the bounce on Zoom and Tesla was explained. Yet, some of the new traders missed some insane opportunities on these two stocks, guys. So in this video, we're going to help you gain a better understanding on what it really means to short the bounce and how to trade specifically move 11 and 3, some of the insights on that. So, and before we get started, make sure that you're looking at the proper time frame charts. Now, if you're taking our charts, diversity, recognition, pattern course, you would know that we highly recommend looking at multiple time frame charts. But after you're done all your legwork, okay, when you're finally sitting down at 9:30 a.m. and you're ready to trade, the most critical chart for you is the 1 day, 1 minute chart. So sometimes it's absolutely amazes me, okay, how most of the new traders, they just look at like Yahoo Finance. And they just simply look at what is the net difference of the stock for the day. How the fuck can you even trade like that? So this is what I mean. A typical new trader goes into like Yahoo Finance and says, oh, Zoom, oh, it's up $132. Oh, how can I have shorted the bounce? Guys, there's no way you will make money as a day trader if you freaking use Yahoo Finance. All it is just data of where the stock closed and opened in relation to the prior day, and it shows you the net change, the net difference. This is not going to make you any money. So even looking at a longer time frame chart, like I've got a daily chart of Zoom here, if you just seen this right here, but you don't know the market moves or what move it represents, okay, now I can look at this again. I'll actually break down roughly what happened throughout the 8-hour trading session just by looking this. But if you don't know the 13 market moves, it's going to be very difficult for you to even gather the data on this and understand how this could have been traded. That's why you should be definitely looking at the daily chart and a 10-day, 30-minute chart and a 5-day, 15-minute chart. All of these charts, they have to be looked at before you're actually going to jump into the trades. Okay, but the most critical aspect, again, when you're sitting down and you're ready to rock and roll and trade at 9:30 is this 1 day, 1 minute chart. So a person that looks at Yahoo Finance that's a brand new trader and says, oh, well, Zoom is up. Okay, and therefore the trade that Leo posted on Zoom a couple of days ago, okay, it's not relevant. It is highly, highly relevant because as a day trader, this is where you make the money. This is the stuff that actually makes you money if you understand the technicalities of what the fuck you gotta do here. So with that, I'm gonna break down the specifics, okay? So in that last video about short and Zoom on the bounce, I specifically said short the open. So the stock opens right here at 442.09. In under 5 minutes, guys, it drops to $410.69. So this is the move from here to here. Now, if you're looking at the wrong time frame chart, or if you're just looking at the net difference on Yahoo, now you would have not known that this was a $32 drop in under 5 minutes. That's your trade right here. The stock opens right here. You buy puts. You cash out right here, guys. Anybody could have done that watched the video, and it would have produced returns over 289% depending on the strikes. Okay? Now, the second entry is right here. Okay? The bounce. Okay? So now it bounces. You short it right here. Okay? From 478 to 428 and 23 cents, guys. This is a huge move. This is a $50 move. Look at the time frame within 72 minutes. So in this trade, you could have been in and out in under 5 minutes, guys. That's all it took right here. And the second trade, okay, you could have been in and out within hour and 12 minutes, hour and 20 minutes roughly. Okay, so 72 minutes. That was the time frame of this particular trade. Now, if you're not familiar with time frames and magnitude move and so on, it's probably good you review some of the recent videos I've posted on entries and exit. They should help you understand this material a little bit better. But so now, clearly, if you're looking at the longer time frame chart, you're not seeing all these intraday moves. And as a day trader, you're supposed to be trading these intraday moves, not just look at them. I mean, I've seen a comment yesterday. The guy says, well, Zoom now is at $450. It's going higher. Okay, hello. Okay, this is the time you should be taking action. This is the time you should be shorting the hell out of it. But let me show you some of the common mistakes and why people don't make money. Now, let me walk you through some typical mistakes. This should be highly, highly helpful if you're trying to take your trading to the next level, guys. So these are the most common mistakes that people make when they see this type of opening. So, generally speaking, a trader right at 9:30, he's still getting his coffee, he's not ready to hit no buttons yet, and so what happens is, okay, instead of getting in and shorting the bounce right here at 442, the sharp drop comes, the trader gets in right here. Okay, the trader gets in at the point where he should be getting the fuck out. Okay, no wonder, okay, he's not making the money because this does not qualify as shorting the bounce. Okay, the trade has already happened here. From 442, you get a drop of $32 right at the open. This is your trade. You get out. You don't get in here because now you're looking at here and you're like, oh my God, yeah, it's definitely dropping. Oh, I'd better buy puts. No, you don't buy puts at the lows of the day. Okay, especially this type of circumstance happens. A trader wants to buy puts out of the money because now he's seen, oh yeah, it's crashing, it's going to go much lower. So in this type of circumstances, trader, let's say now is looking at buying like 385 strike puts. Now initially, maybe when the market was opening, he was thinking about buying a higher strike, but now he sees how quickly this move is coming. Literally within a few minutes, we're already down 32 bucks. The trader now thinks, oh, let me just go ahead and buy these 385s. Which is the worst part, as explained in this entries and exit video I posted about a week ago, guys. Okay, when already a partial size of the move has taken place, okay, you don't want to be, okay, increasing your targets as far as the drop, therefore impacting your strike price. You don't want to go with further out of the money puts, okay, when you're trying to capitalize on this intraday trading type of setup. So the second problem, okay, is the trader at this point, okay, yeah, he can see the bounce, but okay, he's shorting the lows of the day and he's getting the strikes that are way out of the money. And so when the stuff bounces again, of course, the trader's not able to realize any type of gains. So it's targeting the entry. And guys, the easiest thing to do, sometimes when drops like this happen, you're going to miss them. And if you miss this original entry, do not chase it. Okay, so if you're getting in right here, you're chasing the entry. It's never going to work in your favor, I guarantee you, because this is where you're going to pay the highest premium. Your decision making is not going to be the best. You're going to end up buying a worse strike than you were probably originally planning. So there's a whole lot of negatives trying to chase this trade on the way down. Okay, you're much better off waiting for the second bounce. And if you understand what a move 11 formation is, okay, you would have known to wait for the second bounce, which actually is the intraday high of this particular time interval right here at 478. So now, honestly, I'm going to tell you, did we nail the 478? No, we got in at 470, 476. So we were a few dollars off the top, okay? But it created a huge opportunity if you got the right type of strike. So typically, at this point, however, the trader was buying puts not on the bounce, but rather on the dip. Okay, the stuff bounces. Okay, that's when the trader that bought the puts, that's where he gets out and he's locking in a loss. Now, you're doing exactly the opposite from what I described in the video, which is short the bounce. You don't buy puts when stuff drops. You short the bounce, meaning when this stock moves higher, that's when you want to be buying puts. Okay, now with that said, this is going to be the scariest time for you to buy puts, but that's what you have to do. Okay, it's a little bit counterintuitive, especially if you're bullish in nature. Okay, but this is how money is done on shorting the bounce. Okay, and so clearly this is the second bounce is your most ideal entry when shorting, not the first bounce, because of the timing, especially when you're trading weekly options, guys. Okay, here's another reason why some traders don't make the money. They go in to buy these puts or calls a month out in expiration, and so by the time all said and done, okay, even though you have a move 11 formation here, if you own like a month out expiration, okay, those didn't produce any gains for you because overall nothing really happened by the time you calculate all these intraday moves. If you're holding a longer term contract, it's going to be very difficult for you to realize any substantial gains. Now, with that said, okay, bounce 1, you get in right here, you collect right here. Bounce 2 is your most highly profitable bounce because at this point, your options premiums are substantially lower because everybody thinks, oh yeah, we're going much higher. While it's a simple move 11 formation, it's a simple move 11 formation, guys, and if you learn how to target your entries and exits on this, okay, the sky's the limit. You can get exceptionally good at this, okay? So notice, in order to profit from this bounce, you would have had to know what a move 11 is. Okay, you would have had to, based off a move 11, you would understand that the size and the type of the reversal, okay, could be smaller than that of the size of a reversal opposed to, let's say, a move 2 formation. So by trading the right move, you would have been able to help yourself select the right strike price, and selecting the right strike price on intraday trading with weekly options is exactly what makes you the money. You would have also known to time your entries. You can see this highest point in this move 11 formation intraday on Zoom coincides with a timing interval of 10:05 a.m. If you don't know the 8 best intraday time frames for targeting your bounces, then you would have missed out on this magnificent opportunity because this was actually the best trade of the day, right? From 478 to 420, $50 drop. Okay, when the stock was here, you should have been buying 460, 450 strike puts. Not as many were doing. They were trying to buy 400 strike puts. So basically, when it comes to Zoom, okay, you could have knocked out 2 trades before lunchtime, okay? And between those 2 trades, you would have easily made over 300-400% just within 2.5 hours, guys, shorting the bounces. So if you want to make the best use of this video, just literally get a pen and paper and ask yourself a few simple questions. If you took this trade, okay, what was the strike that you purchased? Because if you didn't make the money, it has to do with the strike. Because clearly, the bounce was here, the drop was really nice within a very short amount of time. So this was quick in and out, highly profitable. The second one actually made even more money in terms of the percentage gains because it was a larger size move. It was a $50 move. Okay, so did you get the right strike? That's the question you should be asking. Were you looking at shorting literally on the bounce, or is the reason being you didn't make the money is because you were not shorting the bounces, you were shorting the lows of the day? I mean, the same thing. I talked to somebody, they were like, man, I'm buying Zoom, man, looks like it's reversing, looks like your video was right on point, it's bounced and then it's dropping. And so then the trader watched this whole reversal and then he finally gets in right here at 430, 428. Okay, this is not a bounce. The bounce was right here. The bounce was right at the open. So if you're getting in when it's clear to you that, oh yeah, his video was on point, he was right, but you're getting in right here, you're not going to make money, all right? So understanding move 11 is key. Understanding your entries, the time frame of your entries, the size of the move that you're targeting, guys, that's the stuff that makes you money. I mean, shit, if it was easy, everybody would be doing it. So don't wish it was easier. Wish you were better. Understand this so you can get really fucking good at this. All right, so now with that said, move 11. I've given you a ton of examples in that Zoom video. I'm just going to review them real quick. So on Alta, okay, for example, I've given you this Alta example to show you the bounce and drop. Now, this was a move 2 formation, so that's why the returns on a move 2 are going to be much greater because you're going to be targeting a much greater size of the move. In a move 11, okay, your reversal is going to be limited. The stock actually will never turn negative for the day, so that's why On Zoom, you're looking on Yahoo Finance, you're like, oh, it's up $130. Who gives a shit? Okay, how's that gonna make you any money? Okay, but understanding what move it is, when you're getting in, when you're getting out, that's the stuff that's gonna make you the money. Understanding this type and the size of the move you should be expecting within the particular 13 market moves. That's the kind of information you need in order to estimate your entries and exits, guys. So move to an alt, it produces more returns. Okay, the formation is the same. It's a bounce and drop after the earnings report. Okay, now also while I have this pulled up, I just want to be 100% clear because apparently some people don't understand what a bounce is. So you don't go ahead and short. This is not a bounce, right? So we don't go and we don't buy puts ahead of the earnings with very few rare exceptions, okay, which is a subject for a whole nother video. But basically when we're talking about the bounce after the earnings, you want to wait till the stock moves higher after the earnings report opens up the next morning, okay, and then that's when you want to start buying puts, okay. Now the move to an Alta was a much bigger size move because it was a move to formation, and so therefore your returns were much greater. Now on stuff like Okta, it was a move 3. In a move 3, your returns will be smaller, okay, but they're highly profitable moves, especially if you short the second bounce, okay, not the first bounce, the second bounce in a move 3. If you target your entry there, that's what's going to get you paid. All right, and Splunk, for example, it was a move 12 overall for Splunk that day. Okay, so knowing specifically when to get out in a move 12 is critical for you to be able to time and collect your gains, guys. So all these moves, you have to understand these moves in order to trade like a rock star. Now, the second trade was Tesla, right? So again, if you're looking at this trade right here from the standpoint of a daily chart, okay, or maybe you go into Yahoo Finance and you're like, oh, okay, Tesla is down 23 bucks. What's the big deal? Okay, it is a big deal because you missed out 2 huge trading opportunities that could have made you over 600% on Tesla. Okay, but here's the deal. If you missed your entries and if you're just looking at this and you're like, oh, there is no crash in Tesla, it's only 23 bucks. I mean, you're missing a lot of opportunities that the market is giving you. And so if you want to get better, okay, let me break down this Tesla trade for you because this was actually the easiest trade. Now, when you're looking at Yahoo Finance and you're seeing Tesla ends up minus 23 bucks for the day, it doesn't seem like a big deal unless you understand that it's really over $100 move in the stock. Because of the 5-to-1 split, just last week, that minus $23 would have been minus $115. But understanding that this right here, when Tesla opened up at 505, okay, within 27 minutes, it drops to 470. It looks like this $35 drop is no big deal, okay, but it actually is because just last week, that would have equated to a $175 drop in 27 minutes. And if you were trading last week and Tesla, let's say, dropped from $2,200 to $2,025 within 27 minutes, that would have definitely gotten your attention. So now you're looking at these smaller size numbers and things they don't look as bad, but I guarantee you, if Tesla crashed within 20 minutes, 175 bucks on any given day last week, it would have definitely got your attention. So the point is, same thing I said, short Tesla at the open and on any intraday bounces. Okay, so if you would have shorted Tesla at the open, okay, within 27 minutes, you would have tripled the money. Okay, if you got the right strike. Okay, so if you don't know what strikes to get, okay, you may be getting your trade directionally correctly. You may be actually paying attention to some of the things that we're trying to explain in these videos, okay? But if you're getting the wrong strike, it's going to kill your trade. You can have a perfect trade, okay, and a wrong strike, and you could lose money. So trading options, guys, is not just trading stocks. Trading stocks, you just get the direction right, give the trade enough time, and, you know, your grandmother can get this shit right. Okay, trading options has to do with valuation of timing. strikes, calculations of the magnitude of the move within a specific time frame. That's how you make the money. Okay, so this move right here is literally a $175 move. Okay, and depending on the strike, it would have produced around 300% return if you got the right strike. I'm going to cover that in just a second. Now, second bounce. This is your most highly profitable bounce. You go from 501.49 to 472, guys. That's roughly 30 bucks right there. Again, now this move is slightly longer because it takes a longer time frame, but nonetheless, it was a very easy move to trade without any major bounces after that. It's just a solid downtrend pretty much for the rest of the day, almost visiting the low. Now, both of these trades, again, if you got the wrong strike, okay, this would not be profitable trades for you. So understanding the move 3 possible magnitudes and formations, okay, would have helped you get into the right strike, and therefore both of these trades would have been highly profitable for you. Now, here are the common mistakes. Let's review those to help you get a better understanding. So, the ideal strike, okay, when the stock opened at 9:30 a.m., okay, it was to buy the 490, 495 strikes. And the goal here is by the time it drops, okay, you want to be in the money. So most common mistake is, let's say a trader thought, okay, I agree Tesla's going to drop. It makes sense. I want to buy puts. But then the guy goes and buys like 300, 400 or 380 strikes, okay, in expectation of this move, okay. It's not going to work, okay, because you're selecting the strike price way out of the money, okay. And again, it doesn't look like it's a big drop from 500 to 400, but understand, they just did a stock split. So what you're really saying by buying a 400 strike put is a $100 move would equate to actual $500 drop in Tesla like last week. So you're basically, by buying 400 strike puts, you're saying like, hey, I think this thing is going to drop $500, which basically is going to be very, very tough for a stock to do. So a $100 drop at this point is a huge size drop. I mean, basically, if you look at it from the percentage standpoint, I mean, it's a 20% drop. When Tesla was trading at, $2,200 last week, a 20% drop would have been about 440 bucks. So it's a simple math, but basically, it's really easy for a new trader to think like, oh, well, I've seen Tesla drop $100 last week, so therefore I'm going to go ahead and buy this 400 strike because I think it can drop $100. Well, in percentage points, the math no longer works that way. So hopefully you can see and understand that buying that 400 or 380 strike, even though based off the recent movements in Tesla over the course of the last few weeks, the daily trading range is huge to where it can go 170 bucks higher. It can drop 100 bucks within a couple of hours on the same day, bounce again, right? That no longer is applicable. So in a move 3, because Tesla had a move 3 yesterday, guys. So what it really did is the second bounce, okay? And so the typical mistake is the trader would not initiate the positions 9:30 because he's so damn bullish, okay? He doesn't believe that Tesla stock can drop. By the time Tesla drops right here to 470, he thinks, oh yeah, fuck, I guess Leo was right. I'm going to buy puts. So again, he's mistiming the entry. He's not shorting the bounce, okay? That trader that is so damn bullish, okay, he's buying puts at the worst possible moment, which coincides with the lows of the day. So he's mistiming the entry. He's not using short to bounce strategy, okay? He's just looking at his screen. It looks like it's gonna Tesla is gonna crash lower and lower, and that's the worst time to get in, and that's when the trader gets in. Now, when the stock bounces, which guys, understand this, stocks will have intraday bounces, okay? And so that is the issue with right at the open if you're buying way out of the money strikes. And what you're really assuming is that stuff is just going to drop in straight line and continue dropping through the rest of the day, okay? Stocks don't do that, okay? Neither do they go higher and higher and higher through the rest of the day after they open. So if something is bullish, okay, they will have intraday pullbacks. If something is bearish, they will have intraday bounces, okay? So understand that if you're selecting an out of the money strike, but in the meantime, you're going to have some intraday bounces. Each time the stock or the index you're trading is going to bounce, okay, this out of the money options, they're going to continue to decay and lose value. So you don't want to jump in the out of the money strikes right at the open. So selecting the key strike here is what would have gotten you paid. The 490 strike would have, I mean, at the open it was like, you know, $10 you could have gotten in, and you could have basically been out of it close to $30 within that initial 27-minute time frame. So the second trade, okay, is the second bounce, is the most highly profitable bounce. In a move 3, most of these bounces, they will happen within the first hour and 15 minutes. Now, if you also would have known the 13 market moves, entries, and exits, the new course, guys, okay, you would have known that 1028, this bounce right here, perfectly matches one of our specifics on the entries. And if you knew the formula for that, you would have known this 1028 a.m. on the dot actually coincides with a number in the Fibonacci sequence, which happens to be 13. So 1028 time frame is the best interval in a move 3 formation, okay, to be using to short the bounce, because it is actually has mathematical significance when we split the intraday time frame of the day. Now, this would have been easy. Now, the guy that doesn't know that information, okay, clearly he shorts right here, it bounces. This is where a typical trader that buying puts, this is where they're getting out with a loss. Now, this is where you should be getting in if you want to have gains. So timing your entries, guys, in a move 3 formation is highly, highly profitable, but you've got to know your time frames of the day for best entries. You have to understand the 13 markets move formula, how to trade it. So basically, to summarize all of this up, guys, in both trades, okay, you had 2 opportunities to day trade on each one of the stock. 2 opportunities to day trade on Zoom, 2 opportunities to day trade on Tesla, okay? The common mistakes in both situations were mistiming your entry, going and buying way out of the money strike puts, okay, at the worst possible time of the day, where you should be collecting gains on if you entered the position accurately before. Now, buying out of the money strikes is a huge issue for many, many traders, so learn to calculate your strikes, okay? The people that jumped out of these Tesla puts, okay, by watching the bounce in Tesla, not understanding how to trade the move 3, not understanding the 1028 time interval actually is highly significant based off the 13 market moves, entries, and exits, okay? Understanding all these criteria, guys, is what separates somebody that makes money as a day trader and somebody that doesn't, that just simply goes to Yahoo Finance and watches what the net change for the day is. So if your goal is to become a better trader, guys, look, learn the moves, learn to short the bounce, do it the right way, okay? And I tell you, this is the most valuable trading skill that you could possibly acquire right now as a day trader, because look, a bunch of new traders, okay, are getting lucky right now because the market is doing something it has never done in the history of the stock market. It's staging a 60% rally from March lows, okay, pretty much uninterrupted. And this has never happened in the history of the market. So everybody that's being bullish right now and making money, they will get caught with a big surprise that's awaiting for them in the next 90 days. So if they think they can just go in and buy the dips and buy calls and that's just going to continue working forever and ever, guys, it's not, okay? I know a ton of guys that are buying calls and they're not making any fucking money. So if you're really trying to learn how to take advantage of the craziest market opportunities, the most valuable skill you can learn right now as a day trader is how to short the bounce. But you got to get your entries, you got to get your moves, you got to get all of this stuff right, or you will miss out on the biggest short selling opportunities in the market here in the next 90 days, guys. So with that said, visit 13marketmoves.com, get more information, or more importantly, Click the link below to schedule a 20-minute trading call with a senior trader here at 13 Market Moves. Get your questions answered. Don't wait another day. Take action right now so you wouldn't miss out on how to trade the next few stocks that can make you 600% plus with utilizing weekly options, guys. With that said, I'll catch you in the next trade. Let's roll.